Now, there is constantly innovation everywhere. And so, with the advent of crypto and its more widespread use, it was only a matter of time before tokenization came to stocks. And so, our main focus point concerns this topic: the new frontier of trading tokenized shares of SpaceX and OpenAI. Now, tokenization lets retail investors buy digital tokens, right, like cryptocurrency, crypto tokens, in order to get exposure to something. In this case, being marketed as a way to get exposure to private company equity, bypassing traditional accredited investor rules, which require you to be a person of considerable wealth in order to access some of these private investments. And these things are popping up in a lot of places. Robinhood, Jarzy, Toro, Kraken, they're all trying to explore ways that they can provide retail investors with tokenized versions of these private securities or even public company shares. What's the benefit? Well, you get access to something that you otherwise might not. You also, if it's trading on the blockchain, could have 24/7 trading that doesn't require, the NSCC, National Securities Clearing Corporation, or any other clearinghouse to be the middleman between that trading. But here's the thing. Oftentimes, when somebody pushes you towards something that is new, that you may not fully understand, you need to take a step back, because tokens are derivatives. They're not actual equity in the company. They often represent fractional ownership in a special purpose vehicle, which holds some representation of shares of the company, some real shares. But this separation means that you can't actually say, hey, Robinhood, hey, Kraken, hey, whoever the heck I'm trading with, I want to redeem my real tokens for shares. Hypothetically speaking, any ETF you own, when you own a share of an ETF, you could take an in-kind redemption. You didn't have to sell for dollars. You could sell for shares within that fund of the individual holdings in a slice that is pro rata to what you hold. You can't do that necessarily with these tokens. Another problem? Well, we get questions a lot about closed-end funds where the price tends to diverge from the net asset value. The reason being supply and demand of the shares. Same thing here. You can have divergence between what the value of the token is versus what the actual value of what it represents is, because the supply is so constrained, meaning there's going to be a speculative premium associated with buying and selling these shares. The limited float means the token prices can inflate far beyond what the actual underlying company's value is. Another thing, let's say that Robinhood or whoever this is decides they want to issue more tokens because, dang it, there's so much demand here. We got to get more people access to this. Well, what does that do? That can crash the token price. It can dilute early holders. If it's issued at inflated prices, it can be disadvantageous to the people that are buying it just so that the platforms themselves can get fees. And so here you have a problem of incentives. Private companies can restrict access to their shares. That means that it could be even harder for brokerage firms to expand token supply. If there's a lot of demand, pushing that premium way higher, without the company's cooperation, it's going to be difficult to get the value of that token back down to what the value of the asset actually is. And I'm sure that all of you out there read every 10K for every company you've ever owned, which is me being sarcastic if you're not watching. But you at least have the ability, as an investor in a public company, to see public disclosures and due diligence and forms and financials. There is no requirement to do that for this type of investment. There is a lack of transparency due to that limited due diligence, the limited publicly available information, meaning that a lot of your bets are speculative at best. And so when you see these people throwing things around, these companies throwing ads around saying you could invest in OpenAI, you can invest in SpaceX, it is not really shares in those companies. Sam Altman himself, when Robinhood first announced this, said this is not an investment in OpenAI. And so, as always, the only way that you can protect yourself as an investor, protect yourself within the investment industry, is to fully understand what you are transacting in. I am not an anti-crypto person. I think that blockchain technology in and of itself has a lot of widespread potential, including helping to remove some of the frictions of trading, such that it can happen more often without necessary middlemen, to make sure that both sides of the trade are acting in an appropriate way, that can provide instantaneous settlement, that can provide a very public ledger and a record for how things are trading. But that doesn't mean that every use case will be good, and it doesn't mean that every use case will be safe. And so the main lesson here is, while it does sound really good to be able to get exposure to these private companies, even a slightly deeper look shows you some of the dangers and some of the risks of buying what is really just a derivative and not representative of what they're actually selling.